Hello, fellow compounders. Welcome back. Are you worried about inflation eating away your hard-earned savings? Then you're in the right place. In this video, we're going to do a deep dive into one of the savings options I mentioned in previous videos, Treasury Inflation-Protected Securities, commonly known as TIPS, TIPS. By the end of this video, you'll be equipped with the know-how needed to invest in TIPS. This video is for educational purposes only and should not be considered financial advice. I am not your financial advisor, and you are responsible for your own financial decisions. Let's kick things off by understanding the basics. What are TIPS? TIPS are bonds issued by the US Treasury, but what sets them apart from other bonds is their unique protection feature against inflation. Now let's simplify the issue. Imagine you lend someone $100 today. They promise to return it after 10 years. But 10 years from now, or 10 years down the road, that $100 might not buy you as much as it does today due to inflation. TIPS solves this problem. They adjust the value of your investment with inflation, ensuring your purchasing power remains intact. So, how do TIPS work? When you invest in TIPS, two crucial things happen. Number one, the principal, that's the amount that you invested, gets adjusted semi-annually with inflation. And two, you receive interest, but here's the catch. It's calculated on the adjusted principal. So, if inflation is on the rise, the principal of your TIPS increases. Consequently, the interest you receive also grows. On the flip side, in the rare event of deflation, both values can decrease. However, the US Treasury guarantees that you'll at least get back your original investment amount if you hold the TIPS until maturity. Why consider TIPS? You might wonder, with so many investment options out there, why should you consider TIPS? Here are a few reasons. A, it is a direct hedge against inflation. Your investment grows with inflation, making sure your money doesn't lose value. B, safety. They're backed by the US government. This makes them one of the safest investments around. C, diversification. If you've ever heard the saying, don't put all your eggs in one basket, then you'll know the importance of diversification. TIPS can give you an excellent addition to that diversified investment portfolio. Maturity durations, choices galore. TIPS comes in various maturities, 5, 10, and 30 years. Each duration caters to different investment goals. A shorter maturity means you get your money back sooner, but longer maturities might offer slightly higher yields. It all boils down to what you're looking for. Here's a concept you need to grasp: the real yield. This is the interest rate TIPS offers above inflation. If a TIPS offer a yield of 5% and inflation is 4%, then the real yield is essentially 1%. While these numbers might seem small compared to other flashy investments, remember, it's about preserving your purchasing power. Okay, now let's roll up our sleeves and delve into the nitty-gritty of how to buy TIPS. Number one, the direct purchase option through Treasury Direct. The most straightforward method to buy TIPS is directly from the US government. TreasuryDirect.com is an online platform where you can purchase various Treasury securities, including TIPS, and you can purchase them without any brokerage fees. Yes, you heard it right. No fees. The process is simple. You open an account, choose to purchase TIPS, select your preferred maturity duration, and make your payment. Remember, these are auctioned securities, so you'll either accept the yield determined at auction or specify a yield. 2. You can buy them through brokerages and banks. If Treasury Direct isn't your cup of tea, or if you're already using a brokerage or bank for your investments, good news. Most major brokerages and banks also offer TIPS. While this method is convenient, especially if you want all your investments in one place, do keep an eye for those associated fees. 3. You can also buy TIPS through mutual funds and ETFs. Now let's say you don't want to hold individual TIPS but still want the inflation protection they offer. Enter TIPS, mutual fund, and ETFs. These funds pool money from many investors to buy a diversified collection of TIPS. They offer flexibility as you can sell your shares anytime, unlike individual TIPS, which are best held to maturity. Popular choices include Vanguard's Inflation-Protected Security Fund, ticker VITP, and iShares TIPS Bond ETF, ticker TIP. Always review the fund's objective, past performance, and fees before diving in. Tax considerations. Here's something many overlook: taxes. Even though TIPS protect against inflation, the IRS doesn't give them any special treatment. The increase in principal due to inflation is taxed as ordinary income in the year it occurs. And of course, the interest you earn is taxable too. However, there is a silver lining for those thinking long term. Holding TIPS in tax-advantaged accounts like IRAs or 401ks can shield you from the yearly taxation. 5. Tips on TIPS. Before we wrap up this part, here are some quick tips on TIPS. A. Diversify. Don't put all your money in tips. They are a tool for diversification and safety. B, understand the yield. Remember the real yield concept. Always keep it in mind. And C, stay informed. Economic conditions change. Stay updated to make informed decisions. Next, we'll explore advanced strategies and common misconceptions about tips. Number 1, advanced buying strategies. By now, you know the basics. Let's explore some advanced strategies. Firstly, the ladder strategy. Instead of buying tips of one maturity, distribute the investment across different maturities. As each matures, reinvest in the longest maturity in your ladder. This provides liquidity and diversifies interest rate risk. Another strategy is the barbell approach. Buy short-term and long-term tips, but skip the intermediate. This balances quick liquidity and long-term inflation protection. Number 2, international inflation-protected bonds. Did you know that other countries offer inflation-protected bonds also? Countries like UK with their linkers or Brazil with their NTNBs offer opportunities for diversification. But always remember, with international investments comes additional risk like currency fluctuations. 3, let's debunk some myths. Now let's address some common myths about tips. Myth number 1, tips protect against all types of inflation. While tips adjust for inflation, they're tied to the consumer price index. If your personal expenses rise faster than CPI, your tips might not fully compensate the inflation of your personal expenses. Myth number 2, tips always outperform regular bonds. Not always. Tips outperform when inflation exceeds expectations. In a low inflation environment, traditional bonds might fare better. And myth number 3, tips principal can never decrease. While it's true that at maturity, you'll get your original or inflation adjusted principal back, whichever is higher, if there's deflation, the principal can temporarily decrease. And if you sell your bonds before maturity, you'll lose part of the principal in a deflationary environment. 4, risk with tips. Yes, tips are safer than in many respects, but they aren't risk-free. While they protect against inflation, they can be affected by changes in real interest rates. If real rates rise, tips prices can fall. So, as with all investments, understanding the risk is crucial. So there you have it. Tips are a powerful tool in the investment world, offering a shield against inflation, but they're not a one-size-fits-all solution. Understand your financial goals, risks, and strategies to make the best decisions. Remember to always be compounding. Thanks for watching. See you in the next video. Take care.